Welcome to the webinar, Empowering Your People and Addressing Staffing Shortages with Automation, hosted by Xledger. Today, we'll be talking about the challenges CFOs and F&A teams are facing today and how the right technology solutions, including financial process automation, can help address staffing shortages and drive other positive outcomes. Before we get started, we have a few simple housekeeping matters for our viewers. At the bottom of your screen, you'll find some application widgets for your use. These widgets are all resizable and movable, so feel free to move them around to optimize your desktop space. Now, the slides will advance automatically throughout the presentation. To enlarge the slides, click the Enlarge Slides button in the top right-hand corner of your presentation window. Now, we encourage you to submit questions at any time throughout the presentation using the Q&A widget. We will try to answer your questions during the webcast, but if a fuller answer is needed, or if we run out of time, it will be answered later via email. So please know that we do capture all questions, and we want to make sure you receive an answer. Well, now it's time to get started. My name is Laura Beth Ezel, and I'm excited to moderate this discussion today. We're going to hear from two experts for this webinar. To introduce our experts, first we have David Kuritar, is a senior solutions consultant at Xledger. David is an experienced CEO, CFO, entrepreneur, business owner, and executive leader with decades of experience helping companies establish and attain their goals. David's diverse background encompasses work across many industries and sectors, and he has focused his career on being empathetic with clients, determining what their needs are through insightful questioning and finding solutions, whether in sales or management or strategy. David earned his Master of Business Administration degree from Hayworth School of Business, Western Michigan University, with a management concentration. He also holds a Bachelor of Science degree in Finance and Economics. Einar Pedersen is the Director of Finance for 60 Decibels. Prior to 60 Decibels, Einar was CFO for Storm Capital Management, a London-based assessment management firm, for 10 years. Before that, he held various senior finance roles for 10 years with the Sector Alarm Group, a multinational security firm. He holds a Bachelor of Science in Economics and Business Administration from the Norwegian School of Economics. So thank you for taking the time to speak with us today, both David and Einar. So to kick us off, I just wanted to point out how timely our webinar today is. Staffing shortages are a theme of our discussion today, and they're pertinent to nearly every employer in the U.S., with nearly a quarter of American employees planning to find a new job in 2022. So this comes at a time when, according to the latest job openings and labor turnover data from the Bureau of Labor Statistics, there are nearly 11 million job openings across the U.S. So, David, we all understand that the macro labor environment is challenging. What are CFOs thinking about how this affects their own organizations?
Thanks for kicking us off, Laura Beth. So to answer your question, I think the vast majority of CFOs are concerned about employee turnover and how that turnover really could affect their ability and their team's ability to serve the organization. So there's only about 45% that are highly concerned, which is not the majority, but it's a pretty good size number. And maybe there isn't a majority because they're not seeing the turnover within their own companies or organizations, and maybe they haven't yet experienced the Great Resignation. But from what Laura Beth shared, it is real and it is coming. And I think CFOs would be very mindful to be aware of that and have some planning in place. So I'm good friends with people over at Robert Half and Associates for many, many years. And the problem of staffing is not new for the accounting world just since COVID. So this is going back at least 10 years. And every year it seems to be increasingly difficult to really hire and attract top talent. As COVID is ending and this Great Resignation is unfolding, I think many corporate executives are finding that getting their staff back to work is becoming a bit difficult. Maybe people enjoyed working from home. I think some people maybe near retirement have decided this is a great time for them to exit and live the good life. And also think that we're seeing a lot of accountants leaving some big firms and actually branching out on their own and starting their own consulting CPA or bookkeeping firms.
Great points. And that brings us to our first of several poll questions today. You know, as we explore ideas in the webinar, we'd love to get feedback on how certain issues are affecting your organization. So to that end, we want to ask, how difficult has it been to recruit new F&A talent at your organization? We've got some options here of not difficult at all, slightly difficult, neutral, moderately difficult, or very difficult. So we want to give our audience, if you will, just take a few moments here. We want to give everybody a chance to answer this poll question for us and help us collect that data. So how difficult has it been to recruit new F&A talent at your organization? Not difficult at all, slightly difficult, neutral, moderately difficult, or very difficult. We kind of see against the results we just saw earlier in the graph we saw. So please, at this time, as we pause our presentation, if you'll take the time to answer this first of several poll questions that we have today, we want to collect everyone's responses before we continue on. All right, thank you for those who participated in that poll question. And so we're going to continue on. And so, Einar, your thoughts there?
I think it's very, very interesting. One additional factor that could be influencing hiring challenges and skill shortages is that the big four firms are often gobbling up many graduates, making it harder for industry companies to secure the top talent. So there's plenty of turnover at the big four firms as well. And I find that people don't always learn the practical accounting skills or practical system skills there. And all of that is exacerbating the challenges at the time of what is change for CFO and CFO offices.
You know, and when you say this is a time of immense change for CFOs, are you referring simply, to pandemic-related changes, or is it more than that?
I think it's more than that. It's certainly worth mentioning that COVID had required many organizations to pivot to remote work, including finance team, had maybe had to do a virtual close for the first time. But CFO during the pandemic also faced the challenges of assessing and reporting and forecasting on the business impact of COVID-19. And there's been some unexpected benefits to emerge for organizations as well during the pandemic. As the slide shows on the left, one survey found that more than 40% of CFOs reported improved collaboration with the company as a consequence of the pandemic. And nearly 40% of respondents also noted improved business processes and better strategic focus. That's something we've seen at 60 decibels as well, where we haven't sat next to each other day in and day out. We had to put trust in workflows and business processes. So I totally recognize that. But as David will discuss, now the changing time for CFO and finance teams is something that goes beyond and predates the pandemic.
Yeah, I mean, there's a real transition from a CFO leading a team of accountants that deal mostly with compliance and publishing financials and tax, making sure that the money is spent according to the budget, things like that, and transitioning really to a new level where they're at the table working with senior management, the C-suite, maybe even the board of directors, really to develop the strategy for the business moving forward. So the CPA credential and the type of work that credential enables really less significant for the CFO today more than ever. And that's not to say that the CPA credential doesn't have value, because it really does. What I'm saying is that CPA credential is less important to the role of the CFO than ever before. So you can see from this graph of the top 1,000 largest U.S. publicly traded companies that the percentage that hold that CFO, or percentage of CFOs that hold the CPA credential, is declining, has been declining, and this trend, I think, is going to continue.
It's really interesting there. So we'd love to see what percentage of F&A team members on average have a CPA license. We've got another poll question here, so let's go to that and allow you to start sharing your responses. So approximately what percentage of your F&A team members have a CPA license? We've got 4 options here for you to choose from, between 25%, 25 to 50, 50 to 75, and 75 to 100. So if you'll take the time there to share your response, we would appreciate that. Approximately what percentage of your F&A team members have a CPA license? 4 options here. If you can, if you know the answer there, we would appreciate you taking the time to share your response before we continue on with our presentation. We have a few different poll questions today, and we appreciate the audience's participation in helping us collect this information. All right, thank you for the audience's participation. So, Einar, we'll toss it over to you here.
Thank you. I can answer the question to the poll as well. 60 decibels, we have 75% of our finance teams are CPAs at 60 decibels. But on this slide, CFOs increasingly need to understand the larger aspect of the business, more than just simply understanding the financials. So to stay relevant, we must have the ability to help the business develop and execute on its plan. Recently, an executive coach told me, there's only so much you can learn there's only so much you can, improve your reporting or learn from your reporting. So the CFOs need to stay more on the strategic end of the business. And additional evidence of this is that internally promoted CFO in Fortune 1000 companies were far less likely to be from the controller role or the chief accounting officer role in 2020 than they were a decade before. That's according to Hardwick and Struggles. So there really is a shift of CFOs partnering with other leaders in the C-suite to help drive operations and shape strategy and oversee new responsibilities. And as we can see on this slide, there are many responsibilities that sit on the CFO's shoulders. It can vary by company, by industry, by circumstance. And in my roles, I have overseen departments like traditional HR and IT, FP&A. But in one previous role, I also had customer service. I had a 15 people customer service team under the CFO office.
And I've had similar experiences while I was CFO at Vision Trust International. When I originally joined the team, I was only responsible for the finance and accounting team. But, over the 6 years that I was there, it seemed like every year I picked up additional responsibilities. And at the end of my time there, I had actually picked up every single one of the ones you bullet pointed under the new category there on that slide. So in regards to the strategic financial planning, I was really transition myself and my team away from just recording what was happening, maybe a little forecasting, to actually being part of that conversation, that strategic one with how are we going to accomplish the company goals, and then I would speak to how are we going to pay for those. So one way that we did that was just transitioning from the existing platform onto a digital platform. And I don't mean just paperless, but really enabling the digital workflows to be implemented. And that really helped us a lot. So what this variety and scope of responsibilities means to the CFO is that they really have to have a stellar team on board, one that really complements each other, complements the CFO and what the CFO brings to the table. So in order to do that, and this is kind of humbling, but a CFO really needs to step back and really do a self-analysis. What are their strengths and weaknesses? And then ensure that their team can supplement and cover the weaknesses that they have. So what you end up at the end of the day is a really well-rounded team that can perform at a very high level. So as you can see from the slide here, that CFOs are really lacking in confidence that their own teams have the skills needed to move that organization forward, to grow and to adapt over technology or industry changes in the coming years. So I was one of the CFOs that was here when I joined one of the firms in my past. I inherited an accounting team, and at the time I left, it was a complete new team that was in place. So understanding my own weaknesses, understanding our need to move from the existing platform to a new platform, I basically had to recruit strategically, find people to join that team that could get our organization up to the next level.
That's in part due to the fact that finance team are needing to be more sophisticated, I find. Things are getting more complex. And there's never-ending changes to, say, tax and compliance guidelines that finance teams will have to follow. Plus, over the lifespan of a company, there are situations like that fall on the finance team, like acquisitions, they could be fundraise, due diligence, etc. 60 decibels, we just came through a fundraising process. In the past, I've done M&A, an IPO process. So this it's up to us as finance leaders to rise to those increasing demands and challenges, and to be adequately staffed and have the right technology in place.
In addition to the recruitment problems that some companies are finding that they have based on their legacy technology, in my role at Xledger, I talk to C-suite people at companies every day, and I often hear that they're out looking for a new system because they can't deliver the information to the management, other company stakeholders timely. So that their system is just woefully inefficient. So that inefficiency obviously is, I think, playing into the job satisfaction, maybe retention problems, and as you mentioned, as is mentioned on the slide, definitely having some recruitment problems as well.
And when it comes to moving away from, legacy technologies, what do CFOs need? What should they be looking for?
I think for starters, finding the right size solution can be a big challenge. I can speak a little bit about our journey to Xledger. So my organization, 60 Decibels, is a global organization. We're a remote organization, and we needed a cloud solution. One that we don't run a single software globally that is not cloud based on our organization, just the way we are organized. We started off as what I call a semi-startup. We're a spin-out from our larger organization. We started off using a small business software, small accounting software. It's great for local business, but it doesn't suit the needs of a multinational, multi-geography, multi-currency, medium-sized enterprise. So what we found is aggregating and compiling global data was really challenging as we scaled. And we needed to move to a much stronger multi-geography and multi-currency environment. And what happened was I struggled to find that in the American market. I struggled to find the mid-sized software. I found the American market really, really strong at the top end and really strong at the sort of small business end. But there's a lot of companies in between. And we were referred to Xledger by one of my previous colleagues. Actually, it was one of the best accountants I've had in the past who recommended Xledger to us. He had implemented it across 2 organizations before. And that's how we ended up at Xledger.
Yeah, and that's right, Einar. That finding that right solution really should equip your team pretty well, enable really their capabilities to come out. So enabling them really to work faster, work more accurate, work more efficient as you scale up and grow, and even help deal with that employee turnover that statistically that Laura Beth opened our conversation with today, it's coming if it hasn't already hit your organization. So one of the most sought after goals when I talk to executives at different companies is they're hoping that automation can help solve that problem. So for example, the auto posting of transactions can be a significant time saver, and it can really free up the time and the hours spent in the accounting group from doing these manual transactions and manual workloads to actually kind of speaking what Einar had talked about, but providing a higher level of value to the organization. And that might be through analysis of the financials, understanding what's the story behind the financials that our team needs to tell to the company. So if you can do this, it should really lead to a higher retention rate. So if there's great people on your team, they probably don't like that manual data entry and the manual work, and would actually be better using their skill set at some of this higher level work, and that should improve that retention. So I mentioned earlier that I had inherited a team that basically transitioned out of the company. So that's really at the far end of the spectrum. So that may not happen with everyone, but other people are just looking for automation, maybe to take care of that excess work that they're struggling to fill in their current processes. So that's kind of both ends of that spectrum.
Yeah, what I find though is it's not enough to simply automate. For automations, you need to be able to trust the automation. You can't just be moving around data. You need to know that the automation you apply is more efficient and more accurate than humans. So in order to trust the automation, you need to be able to audit the automation and ensure that the stability is working with big data. As an example, I was in a security firm, and we had over 100,000 customers, and we had automated the revenue recognition postings. What happened in that particular system is to be able to verify to auditors that the automation actually worked. We were running a parallel manual system on the side, so that because the audit trail and the verification wasn't there, the automation was present, but we needed to verify on the side, which defeats the purpose of the automation. Mm-hmm. So, but when you have an automation you can trust that is working and is, say, auditable, that is handling tasks where human thinking isn't necessary, it frees your capacity to deploy your human capital, your expensive human capital, where it's best suited to help you.
And, what are some of the ways they end up helping? What's being asked of finance team members today that CFOs need their teams to handle? David?
Yeah, well, that question brings us kind of to the next technological need that we'll discuss today, which is real-time information. So, CFOs, they want information timely, they want accurate. In my past, I've worked for a number of different presidents. That's what they ask for. And I kind of joke with them at the time that fast, accurate, you can have one or the other, but not both. And that was actually a true statement back then, because the technology that we had at the time just could not support both speed and accuracy. But in today's platforms, those can be found, like in Xledger, that we can actually support both getting that information quickly and timely so that decisions could be made real time, and also do it in an accurate way. So through automation is much more accurate than keystroking and even manipulating information in Excel and importing it back into the system. There's a lot of problems that can generate from that type of process. So, if you have your team entering information, exporting it, manipulating it, re-importing that's if you're doing that and you're in that scenario, that's really a tremendous waste of time. And the technology that's out today can really help automate those processes, make it run much smoother and quicker, and get that real-time information out to the key decision makers.
And for us, we were dealing with the challenge of consolidating and aggregating data across global legal entities. So automatic consolidation has been an absolute game changer for us in taking on the close. With the small accounting software we used earlier, it took us 3 weeks after month end to do financial close. So now we close with a lot of automation in 5 days. We could probably close faster, to be honest. And our management team can meet sooner and review up-to-date information.
Wow, that's a huge difference. So thanks for sharing that. So are there any more things CFOs, are looking for or should be, David?
Yeah, I think another thing that CFOs really should be focused in on today is really consolidating the number of applications or systems that they're utilizing to run the business today. So there's an inherent risk I alluded to earlier about the data quality as you're exporting or importing information. And if you've built out so many integrations with other third-party softwares, I mean, there's that risk if trying to sync all those databases that, one break in that model is going to basically shut down your ability to report timely to your company. So you really want to make informed decisions, and in order to do that, you really want a solid platform to operate from. So if you find a software that's out there like Xledger, it's unified. All of the data's in a single database, so you don't have that problem of importing, exporting. You don't have the problem of integrating and trying to maintain those links, and the data flow is it's not interrupted.
Great. And as we come to the conclusion of our discussion of technological needs, we want to know what area is a technological need currently for your F&A team. So please share your response here as we move to the poll question so you can answer there. We have 4 options: the right size solutions that can scale along with you, trusted automation, real-time information, or unified solutions. So we would appreciate, as we pause here for another poll question, if you would input your answer here. What area is a technological need currently for your F&A team? You have the right size solutions that can scale along with you, trusted automation, real-time information, unified solutions. So if you'll take the time here to answer this polling question for us, we would appreciate it. Before we continue on with our presentation, we've had a few so far, and we appreciate the participation we've had from our audience in those poll questions and helping us as we move through this presentation. All right, we will continue on. So to put a pin in this part of the discussion, it looks like automation, insight, and scalability are essential. Now that we know organizations' technological needs, what are some things CFOs need to be thinking about when it comes to debuting new technologies that deliver that automation, insight, and scalability? How do automation, insight, and scalability help CFOs with staffing shortages and skill gaps? David?
Yeah, well, those are important questions. And the answers really come down to the ability of the automation and really software more broadly to unleash that strategically built team's potential that you have. So CFOs really need to be aware of what happens when you go through system upgrades, and what impact that's going to have on their staff. So some staff, probably the better staff, are going to really embrace that new technology, and they're going to love that they're off their plate is going to be some of that manual tasks that they probably don't enjoy, and it's going to increase their really their quality of their work life, and that should impact retention. So I guess the story there is if you want to improve retention and improve your technology. So contrary to that might be some other people in your organization that may not adapt so well to change and may not adapt so well to new technology. So as a CFO, you've got to have a contingency plan in place really to recognize that and have plans to deal with it. So oftentimes doing what's really in the best interest of the company and the organization overall could cause a change for you on your finance team of who is on it. So as you move towards automation in that more complex system, you might have a labor shortage, and I'm just kind of hinting at, you might lose some people, those people that couldn't transition to the new environment. So technology should be able to help deal with some of that labor shortage that's short term, but overall, as Einar had mentioned earlier, that automation ultimately, once you get through that first hurdle of resetting your team, it's really going to help you deal with more capacity. So, you're going to be able to deploy your top talent really where it's best suited for the organization. So the more automation that you have, the greater the impact it's going to have on your staffing needs.
Yeah, that's right, David. And to me, it's not just about efficiency gains and potential, say, headcount reduction or of automating processes, but also putting square pegs in square holes when it comes to managing your staff. It's about getting more from your people, ensuring they're working on what's most valuable to you, to the function, and to the company.
Yeah, that makes me think of Jim Collins' book, Good to Great, and it really emphasizes, I think the whole theme is about making sure you've got the right people on the bus and those right people in the right seat. So if you can do that as a CFO, it's your job. That's really going to enable that finance team to better, in a strategic way, help the organization better perform overall. So again, that automation opens up that opportunity for your best skilled staff to really get freed up, reducing that mundane work on their desk. Like we've talked about before, so many people I talk to are still spending time, and these are high-level, highly qualified people, but they're exporting information to Excel, they're manipulating that information, they're re-importing it into the system, and that is not what the people I talk to enjoy doing. So having that automation put in place really can help the team focus more on, again, the story behind the numbers, and maybe find areas through their analysis of expense reduction, but even maybe more importantly, and I've actually seen this happen, and it's really exciting, where through their analysis, they're actually able to share with the operating side of the company what product lines or services are actually the most profitable, and that might move the company and pivot them toward that direction.
Yeah, and by upskilling teams in those potential ways, CFOs will better deliver the growing expectations that CEOs have on their departments. Finance is becoming more essential, and CFO and the teams increasingly having a more important seat at the table when it comes to achieving goals and working with the other C-suite leaders. And as we see on the slide here, when asked by IBM to identify which other members of the C-suite will play the most crucial role for their organization over the next 2 to 3 years, 57% of CEOs named the CFOs more than the other C-suite members.
Mm-hmm. Yeah. In fact, CFOs are more sure of the value of the CFO than CFOs are actually thinking about themselves. So that's articulated on this slide. But to us, that shows that it's time really for CFOs to take steps in their departments and in their function really to operate as effectively as possible. And when an accomplished CFO and their team has more bandwidth, they're able to more embrace that strategic conversation with the C-suite and other managers. And having that bandwidth, I think, is also going to enable them to build their confidence when they see what they're able to deliver for the company. So from my experience, and it is not unique, there is a rising expectation that the CFO deliver, that real-time insight to the C-suite, to other decision makers, so that these important decisions could be made more timely. And from my experience, those most important decisions, they can run the gamut from anything from day to day and budgets all the way to that big picture, like corporate acquisitions or even corporate restructuring. So I really believe that the CFO, in order to support their organizations during times of change, they need to pivot their skill set, possibly if they're not there already. But they also not just react to change, but they really need to become agents of change, especially when it's coming into that adoption of new technology that can really revolutionize the company. And part of that is because the financial performance of companies and the adoption of the digital technology, they often really go hand in hand. So according to this chart from this McKinsey report, that the top performing 10% of companies are the ones that are in the cloud that are digitized, electronic workflows, that they are outperforming their industry peers. So they're earning 80%, the top 10% earning 80% of their industry, of that pie. So it's just really important, I think, to improve technology if you're on a legacy system.
Yeah, and I can speak specifically to the value of having immediate access to data and how critical that has been to us at 60 Decibels. I'm a frequent user of the Xledger's BI dashboard, and it tells us directly where we have our cash balances, in which geographies and in which currencies we have our current cash. So that's been great from a treasury perspective. We also went through a fundraising process, which I had mentioned earlier on, which that process included a significant due diligence. That the DD consultants would ask us to provide data in an aggregated fashion, be it global data on payroll or globally on this and that expense types across multiple geographies. If we were still using 4 different software, one for each legal entity, we've been dealing with hundreds and hundreds of spreadsheets to aggregate the data. Instead, for every question we got, we were able to query the software with one query to answer DD questions across all our geographies. And that was a success factor in that process. And we came out DD and we got some good investors involved.
Well, with the specificities of DD, sometimes it is necessary to reevaluate processes and solutions. So we've got another polling question here. Are you currently reevaluating your financial software solution? So please feel free to share a response here. We've got 4 options. Yes, we are currently reevaluating. We are in the research phase. It has been briefly discussed, or no, we are not reevaluating. So we're going to take a pause here again during our presentation to allow our audience to answer our next polling question here. Are you currently reevaluating your financial software solutions? Yes, we are currently reevaluating. Second, we are in the research phase, or it has been briefly discussed. Maybe you're just starting the discussions, or no, we are not reevaluating. So we appreciate our audience and your participation today for each of these polling questions. Also, a reminder that if you have a question for our experts, that you can use the Q&A widget as we near the end of our time. And we just wanted to remind you that you can use that Q&A widget to submit a question to our experts today. Again, we'll just pause for a few more seconds before we continue on with our presentation, and we thank you for your participation in these polling questions today. Awesome. So it is great to get a real-life example of how the capabilities of Xledger have really benefited you. So with that, we are coming to a close. And David, is there anything you want to say about Xledger before we go?
Sure. Thank you. I think most importantly, working at Xledger, just want to state that it's providing, I think, the highest level of customer service and support, and really a focus on developing long-term relationships. Xledger continues to earn a 99% retention rate. So every day we are earning and building confidence with over 10,000 companies that operate in over 60 countries. So, and because we really value these long-term relationships, and we really do value that 99% retention rate, we continue really to limit our sales efforts to companies that are really seeking to take advantage of the capabilities that our solution provides. So we want to work with finance and accounting teams that want to better serve their company through technology, through automation, through the business intelligent tools. And we really want to work with them that want to improve the accuracy of the work through the speed of which they're getting through these accounting processes, and ones that really want to save on expenses and be positioned to scale up for future growth. So I guess becoming a client of Xledger, would love to talk to you if you are interested in seeking any of these solutions. And I think, having said that, with Einar and I both just want to say thank you for those listening, and going to turn the reins back to you.
Excellent. Well, great. And thank you so much for that. A really insightful presentation today. So now for our Q&A session, we are nearing the end of our time today, but we do have a few more minutes. We have been taking question submissions from our audience throughout this webinar, so we'll try to get through as many as we can before we hit our time limit. A reminder, you can use the Q&A widget to submit a question. If we're not able to get to it here before we close, just know that someone will follow up with you after the webinar. So our first question here is, Einar brought up auditability. So David, can you talk about how audit trails work in Xledger?
Sure. Maybe first and foremost that our Xledger accounting model is both GAAP and IFRS compliant. And our ERP system has a couple different things. One, a journal entry when it's posted. We document who posted it, when, and any changes to that journal entry for the life of that journal entry, they're always there, auditable. We also have what we call an audit trace. So any changes made throughout the system, someone's on an employee record or in a really any type of record, customer record, vendor record, all of those are tracked. Any changes made are time-stamped, and any approvals of those changes are also noted. So it's a pretty robust audit trail. We even have a license that we can provide auditors that's read-only, and they can go in and do an analysis and research as they need.
Great. Thank you for taking that question on there. Okay. Next question here. How can using technology influence retention? So, staffing shortages, maybe company culture, et cetera. Who'd like to take that one on?
I can answer that. I think, for one, people want to work in a modern business where they can partake in value-added activities rather than mundane, manual, repetitive tasks. And I actually use technology actively in the recruitment process to demonstrate to new candidates and potential new employees what kind of company we strive to be with regards to technology. So I really do believe that investment in technology can definitely influence retention.
Great. Thank you for jumping on that question there. Okay. Another question here. What is a reasonable amount of staffing hours one could expect to be reduced from implementing accounting automation? I thought the same thing. So I like this question here. David, I think that's probably directed towards you.
Yeah, I'll take that one on. That's somewhat of a loaded question, but it's a good one. And I think that's probably on the mind of most people watching this webinar. But before I answer it, I just want to state that a lot of what we bring to the table is also going to help people, reduce if they're overburdened in their departments and on their teams. It's going to help absorb that additional work that's probably stressing out and causing retention problems on your team. So we can do that. Another benefit really is as you are growing and scaling that you can do more with our system without having to hire additional people onto your team. And I think anyone who's been out looking for talent obviously knows that that's a difficult thing to get done. So now I'm going to answer your question. And so every company's unique, and I talk to companies just about every day, and part of my job is really to talk with them to analyze, are we a good fit for them or not? So I spend my time talking through their processes, their workflows, their team skill sets, and really try to assess for them what the potential savings are if they licensed Xledger. So these conversations that I have are pretty relaxed. They're low-keyed, but they are often enlightening. So, my contact information's up on this slide. So if anyone's interested to carry on this conversation that we started today, I'd be more than happy to engage that conversation. So.
Well, excellent. Well, thank you both for taking on those questions today. That wraps up our Q&A portion. And before we sign off, I just wanted to thank you again, David and Einar, for taking the time to share your expertise and insights with us today. For our viewers, if you asked a question during the Q&A that we didn't get to, the Xledger team will deliver an answer to you via email. Today's webinar will also be available on demand if you want to review anything we talked about. Thanks again for watching.